Frank, hold it steady. I'm gonna put the star on the top of the tree.
Hold on, let me plug it in first.
Whoa! Watch the food, will you, Frank? I got an EDGEFINDER alert I want to look at.
I got you.
The food, Frank, not the charts.
Huh? Oh, yeah, sure thing. You didn't leave the keys in the spaceship, did you?
Yeah, I did. Why?
I think someone just stole it.
Oh, gosh. You know what? Whatever. That was kind of a last month thing anyways.
I think I just saw Santa walk past the window.
Frank, the food! You left the oven on!
This holiday season, give yourself the gift you know that you've been wanting. A funded trading account with FX2. FX2 allows you to earn real profits on a simulated account up to $200,000. To start, select any of their one-step evaluations. We know things can get pretty hectic during the holidays, but you can take your time with the evaluations because there's no time limit to complete them. And with FX2, once you pass, they'll even refund your evaluation fee during your first withdrawal. You can collect up to 85% of the profits that you gain on your account. You can buy a whole lot of presents with that kind of money. Get funded with FX2 today and find the most wonderful trades of the year.
All right, everybody. Good morning. Welcome back to another live stream. Thanks for being with me here, hanging out. Get some people. There's actually a lot of you here today. Got 245 people hanging out. Thank you for being here. Hope you guys like those intros. I saw some people enjoying them. Phil, shout out to you. To anybody else who enjoys those, the cozy Christmas intros. They're on the surface they look cozy, and then if you listen to the crazy one-liners that Frank and I put together with Chandler and James, it was it's not so vibey. Regardless, good to have you guys back. We're here. Couple days away from Christmas and taking a look at markets, seeing if anything is moving. There is some last minute news here that could cause some volatility for those of you guys who are watching things like gold, things like the currency pairs, indices, etc. We still have today, we have final GDP that comes out in about 3.5 minutes. That could be market moving. Same with the unemployment claims. It's a big question mark. These things are not necessarily, oh, they're going to massively spike the market no matter what happens. They could cause spikes or they could do absolutely nothing. It just depends. I like to say when it comes to news events, news is only as market moving as it is exciting. Like if something comes out on the news and it's just like, oh, your local pizzeria just put out a new type of pizza, nobody's going to watch the news for that. They're going to be like, yeah, that's whatever. But if there is, some catastrophic thing that happens, something terrible, everybody turns the news on. Same thing with trading, same thing with markets. In terms of volatility, if you want the markets to freak out, it has to be a freak out number. So yeah, I think it might be a non-event. USD already made some good moves this morning. It just, like I said, just depends what comes out. If you get a final GDP that's hotter than expected, that could cause some dollar positivity, but we'll have to see. I do want to say also, Looking ahead tomorrow, we do have some good volatility expectations with core PCE. That's probably going to be a little bit more interesting. Another side of things that's really quite curious is, am I still in my pound trade? Let's take a look. I stopped out of the trade. I was trailed out of pound dollar. In fact, I need to update members on this. 1 second. We're going to do that now before I forget. Okay. Yep. I just updated members. If you guys are in the Discord, I did in fact get trailed out for profit on GBP USD. Price came down, tapped me out, and I'm fine with that. To be honest, I am glad that this is the case, but I currently have 0 positions open on the trading side of things because the S&P trade closed. We got to talk about that in just a minute. We are coming close to the news, though, so let me stay on topic for a moment here. Again, we have in just a moment, we have what did I go back in time? Oh, okay, yeah. In just a moment, we have final GDP in 1 minute. Unemployment claims. Both of these have the potential to be market moving, but just going to depend on what we see happen in terms of the numbers. So let's pull up some charts. Got gold in the bottom left, dollar in the top right, pound S&P bottom right, and we'll keep the pound up there just for fun. We'll switch it over to a 15-minute chart. All of these charts are 15 minutes, guys. We have about 40 seconds to go. We'll get the numbers, see if there's any significant reaction. There's 400 of you guys here. Do me a quick favor. If you're enjoying the show, hit that thumbs up button. Supports the team behind the scenes. I'm the face of the show right now, but I can tell you, there's several people that put in a lot of work to make these shows what they are. So if you support what we're doing here for free, smash that thumbs up button. All right, guys, breaking news coming in here in just a moment. And again, we are watching for final GDP numbers coming out. Should be in the next few seconds. Same with unemployment claims. See if there's anything surprising here. All right, and S&P snapped up. Gold snapped up. Initially, at least. Pound USD, same thing. These are 15-minute candles, so don't let them be deceiving you. Let's see what we got. Final GDP came out as expected, quarter over quarter. So we're seeing a mixed candle reaction, which would make sense when you get numbers exactly as kind of consensus. Unemployment claims came in less than expected, perhaps slightly positive for the dollar. Pound USD down, gold down, dollar index slightly pushing up. These are 15-minute candles, as I mentioned, guys. S&P trying to push here. I did mention this briefly, but let me make sure I say this clearly. I am out of the S&P trade. I did trail out yesterday. Officially no longer in the S&P trade. It will be missed. To be honest, it was kind of sad to watch it go. Yesterday with this big sell-off, my stop loss, which was trailed up to this point, did get trailed for profit. It was like a 50-day hold, which is a very long time for me with a trade to hold it. Like that is a very, very long duration trade for me. The reason you may ask, why was it so long? If you're newer to my shows or to my content, you may not realize or may not have heard of my trading style, which is mostly fundamentals with a mix of technicals. And, the way I manage trades is I trail stops. And so I've trailed this trade so many times along the way up. And yesterday, we finally got a meaningful enough candle to the downside to get me out of the trade. And to be completely honest, I'm okay with this. The market has had from the lows here, it's had to the highs, it was a 16.6% rally in 60 days or so. That is a remarkable rally. And so I'm happy to trail out here and to reset and maybe look for new positions, whether it be in the S&P 500. I have my eye on gold as well. And we'll keep tabs on all of it. Congrats, Nick, on the SP. Thank you very much, Roberta. I appreciate that. So period, all indices dropped yesterday. Saw it on Bloomberg. I mean, you have to kind of, here's my take, and I'm gonna clear my trade markups, which is, truthfully, it is sad for me to say goodbye. But we are, you know, let's not get too emotionally attached to this trade. At the end of the day, it is a trade. It wasn't an investment. It was a trade that just kept going. You know, here's the thing, right? You had the S&P 500 rally so hard, and you know, I was able to trail, and ended up, when that candle broke back, I'm fine with this because this move has been so strong and arguably getting a bit extended. If the market, I'll tell you right now though, if the market pulls back to 4,600, I'll probably be buying again. But I do think that it is a reasonable thing to trail a stop, and when this market shows potential signs of topping, we're out of there. Did you clear 55K? No, I think it closed for about 49,000, which is a absolute, I've got a video coming out on the full trade. We've got it in the lab, as I like to say, aka Chandler, the editor, will cut that one up for us, and that'll be on the channel probably sometime today. The trade became part of the family. Yeah, it did. It did. Anyways, you know, if it runs past the highs here today, will I be a little sad? Yeah, but I kind of am okay with this. I'm okay with the idea of resetting and looking for, you know, the next position. I think that, you know, there was also gold. I want to look a little closer at gold and see if we can get this pop. If we get the breakout, I've been talking about, you know, looking for the rally that I think that is due for gold for a while, and that might not come anytime soon. I will say we're coming into the Christmas time, so obviously volatility expected to be, you know, highly diminished in the coming days. But if we do get a meaningful pop, if we get a breakout on gold, I will be watching it. EDGEFINDER has gold as a neutral reading right now, and I want to look into that a little bit closer, see what's going on there. Gold getting a neutral reading. What is going on with that? Trend is up. Economic stats, GDP staying in there, inflation coming down, labor statistics not great for gold. Why is that? Let's go look at gold. Give it a second to load here. So I just pulled up the gold meter or the gold scanner page. Retail is 51% short, 49% long. So retail traders pretty mixed here. Seasonally, January is a good month though, and you guys know my S&P trade seasonality was a huge player in it. So I do like this possible bullishness from gold. Also, I need to get these colors standardized. I don't know why it does these random colors. Anyways, overall score is +2. We're losing some score on economic stats in the unemployment. I'm sorry, in the employment area. Let's go look into that. I'll show you how you can do that if you guys aren't familiar. So we can go into the labor stats and go into indices, gold, Bitcoin. Take a look at this. And I'm drilling down into the scoring. I haven't even opened this page in a few days, so hopefully it still is alive. And it's not. We've been working on some of this stuff here behind the scenes. Let's see what happens if I switch it to gold. Yep. That chart is not working, but the rest should be working fine. Okay, so let's take a look at labor, and this is how it's impacting gold. So NFP, of course, when you're talking about XAU USD, you're talking about the dollar. NFP previously was at 150,000 jobs. We had a strong NFP at 199. That is going to be bearish for gold. Why? strong jobs, strong economy. That is usually, general consensus. So if the economy is decently strong in the jobs market, NFP, the blue is the current. So we had a hot labor market. Okay, that's bearish for gold. That's why we get the score impact over here, -1. And I hope that this is helpful. If you're somebody who uses the Edge Finder, this is a little education segment that you can understand how the Edge Finder actually, the algorithm behind the scenes scores everything. Jobless claims, we will get updates on this, by the way. That just came out lower than expected. That's going to stay -1. Check this out. Unemployment claims, less people are filing for unemployment, and then unemployment rate is still very, very low, bearish for gold. So it does somewhat make sense. If this labor market stays very strong, it kind of caps the upside for gold in a way, because a strong labor market basically says, well, the economy and the government, there's a lot of faith there. Whereas if the job market is like falling apart and unemployment claims are shooting up and, job creation is poor, that's going to be more weak for gold. Does this chart make sense to you guys? Do me a quick favor, type yes in the chat if this breakdown made sense to you on gold here today on the Edge Finder's labor stats scanner. Not a chart that we usually focus on, but it is a quieter day in markets. So I figured we could do a little bit more education. Would you guys like that? Let me know. Hit yes in the chat. Type yes a couple times in the chat if you don't mind. Let me know if you would like me to be a little bit more on the fundamentals education side of things today, because again, we are the market itself is going to be likely pretty quiet pretty soon. So if there's a setup, then hey, I might still take it, but it's a lot less likely. Cool. You guys are down for it. All right. By the way, while I'm on the topic, if somebody who is a regular has been here and you're like, okay, this is a cool tool that you guys have put together, then thank you for saying that. I really appreciate that. But by the way, if you do want a copy of the software, we're doing a 40% off holiday sale right now. If you shoot us a direct message on our website, you can actually get 40% off of the software that we're using. If you see how this software can help you to understand fundamentals better and even automate a ton of the fundamental side, then hey, you and I are thinking the same way. That's why we built it, right? The idea is fundamentals are hard. They're a lot of work. There's so much data to go through. So software is a magical thing. Software is a beautiful thing. I went to school for software engineering. The utility that it can bring to trading is unmatched. I mean, all of us use TradingView, right? That's someone's, probably many people, definitely many people's software dream to build something so useful for traders. That's what we're trying to do at A1. We're trying to build tools that help traders to expand their knowledge, to automate processes and find better trades. At the end of the day, that is why we are in business. If you want a copy, get 40% off if you shoot us a message while we're live here. Someone from our team will hook you up with a copy of the software. You get our COT data, all of the economic labor scans, inflation scans, etc. We also have all of our scanners, whether you trade gold, indices, majors or minor pairs, oil, whatever you trade. You have our top setups algorithm. All of it is included in the Edge Finder. This is a tool, like I said, we have dedicated basically the last few years to designing this software to help traders find better fundamental backed setups. If you want a copy, get a huge discount. Shoot us a DM. Right there. Someone from our team will hook you up. Okay. Thanks for your channel, Nick, because I'm educated for free. Your channels are the best. Thank you. I appreciate that. I'm glad that it is helpful to you. The cool thing is that fundamentals, technicals, they both play a key role, right? Fundamentals help me to find direction. Technicals are a wonderful way to spot entries, exits, and help with the stop loss placement, which is a really important component to profitable trading. In just a moment, we're going to be joined by two technical traders, which I'm excited to have them on again for our, we can call it like our Christmas version of Technical Thursdays, as we are very, very close to Christmas Eve, Christmas Day. It should be a nice time. And I do want to say to anybody who celebrates, Merry Christmas. And I hope you have a great couple days away from the desk. With that said, we're going to take a quick break, thank our sponsors who make this show possible, and then I'm going to go to Miko and Marco. We're going to talk some technical setups here into year end. Check it out.
The holiday season. Many people think it's the most wonderful time of the year. While everyone's out and about, grabbing gifts for loved ones, don't forget to get something for the most important person on your list. You. Yes, get something nice for yourself. Get yourself the gift of a premier trading software and community by signing up with Eightcap. Eightcap is in the giving spirit because they're handing out the A1 EDGEFINDER 100% for free. In order to join in on the holiday fun, just create a trading account with Eightcap, and if you stuff your account full of funds like a stocking over the fireplace, you'll get access to the EDGEFINDER and our trading Discord. So don't forget to give yourself a gift this holiday season and sign up with Eightcap using the link being dropped in the chat now or in the description down below. Don't get put on the naughty list. Trade with Eightcap.
All right, guys, and we are back with Miko and Marco for Technical Thursdays. What's going on, guys?
Hello.
What's up?
Good to have you back. And I guess we know the drill, and I already know one of our themes today, and probably a question for a lot of the traders in the audience is, how do you approach this end of the year phase where you get a lot less trading volume, a lot less volatility, if you will, usually? And I guess, how do you approach that? So I guess we'll go with Marco first. Walk us through your pairs, walk us through your what your watch list is looking like, and also feel free to answer that question however you'd like.
So for December, this is the main sort of price action that I always see. It's super flat. It's stuck inside of my most major high and major low, so basically range bound. And as I'm a trend trader, this is something I want to avoid. So what I'm looking for the euro and the US dollar is a large push up or a large push down. Now, will I get it? Well, maybe. Some Decembers have had some trending price action, but most of them are flat and slow like this. So what is my plan for Decembers? Well, just keep trading the same way I always trade, but be a little bit more careful. So avoid maybe some questionable setups that I'm on the fence on, and target only the no-brainer setups. So that's for the EU. EJ, as you can see, this is my most or major high line. This is the major low line, and it's stuck in this range. So I'm looking for the same thing as on the euro and the US dollar, large push up or large push down. Aussie US dollar, this one kind of flat here, not really moving anywhere. So let's see if this push can continue up. But for now, this is not on my watch list. I'm not seeing anything for the Aussie and the US dollar. Aussie Japanese yen, same as the Euro Japanese yen. So stuck inside the major high, major low, waiting for a large push up or a large push down. Pound is possibly forming a setup. It's kind of descending here. So my main thing is to look for ascending and descending channels. And I'm seeing a bit of a descending channel here. So it all depends on how this candle will close. If it closes here on the top with a nice clean close, printing no wick, and then maybe continues, the next candle continues a little bit, I would be looking to buy, because as I said, after a descending channel, I expect the price to start an uptrend like this. So if that happens, I will be looking to buy the pound, and then we have the New Zealand and the Japanese yen. This pair is the only one that's really on the watch list. Why? Well, because I'm seeing an established trend right now. So look at these candles right here. This is what I'm searching for. Clean close, clean close, clean close, bit of a wick, but another clean close. So a very, very strong move down. And I want to see if price will push down one more time and then look for entries. So out of all of the 6 pairs that I trade, New Zealand and the Japanese yen is the only one that is really interesting. Rest of them really range bound, flat. Possibly next week they'll push up or down, but yeah, not expecting much for a December. So really preparing for January, possibly researching new setups, new entries, new trading edges. That is kind of the plan for December, preparing for the next year, not really trading that heavy.
So question, just to you mentioned something there too about new setups, new ideas, and kind of research phase. First of all, I just want to say to people in the audience, if you have some free time and you're not yet profitable, I've been pushing for this. It's not toxic hustler mentality. It's just hard work. If you have some time off and you're not doing anything, shut off the video games, turn off the Netflix, and get to work. I mean, if you want to be a profitable trader, you got it. I mean, come on, what are you doing? Anyways, Marco, question to you on that.
Sure.
During this time, you mentioned maybe looking at researching other things. Are you considering other strategies or mixing in another strategy? Is that what you mean into the new year?
So I'm sticking with the 1 hour chart. So I know fairly well what the price will do most of the time. When I see a trend, when I see, for example, a descending channel. So most of the time I know what will happen, but I currently use only 2 entry styles. I basically use the flag or the break and the retest. So what I'm looking for is to exploit my price action knowledge, stay on the 1 hour chart, but get in some more entry setups. Okay. Yeah, most of the time I can actually forecast where the price will go, but I cannot exploit it because either it has basically the trend has run away without me, without giving any potential entries, or it's forming something that I have not thoroughly researched yet. So maybe some sort of a pattern that I have not fully researched on this 1 hour chart, or maybe add a new pair as well. But for now, I'm just looking for new entries on the 1 hour chart on my 6 trading pairs. And then I'll maybe take a look at gold, because gold seems interesting.
Sure. Well, you'll have to keep us updated on that for sure. And speaking of gold, I'm going to ask Miko, what do you think about gold or any USD pair going into the end of the year? And I guess same question, how do you play usually the end of the year, as this is obviously not your first Christmas around trading, but how do you take it? And are there anything that you're watching close during this time?
Yeah, I mean, a lot of my focus is with the dollar pairs. I am a bear on the DXY. So for me, everything looks very, very bearish. So for pairs like EURUSD, gold, silver, my attention is more on silver, but I will touch on gold. But particularly EURUSD, if I can see that continue, I'm expecting DXY to potentially reach these lows here, just underneath 100 longer term. So if that's the case, if we're going to see that trend continue, I'm looking at buying EURUSD back to those kind of corresponding highs around 1.12. So I'm looking for the break of this high, which we're just coming into now, around 1.1. We came in really hard last week, but we failed to break through. I'm being hesitant to look to buy EURUSD because I want to see the trend continue. I want to see higher highs. I want to see higher lows. I want to see momentum continue to push us higher. And if we can see that, if we can see a nice pop above the high there, that'll tell me that, okay, this 4H trend's back bullish again, dollar's weak again, and now we're breaking through resistance. I'll be more than happy to look for pullbacks and continue to buy this. And if my analysis is correct, we've still got a pretty long way to go. Another 200-ish pips there to that target. So there's still some mileage left for EURUSD. So I like this buy setup here if we can break through the highs. And with gold, I'm not really liking the price action of gold. It's been quite choppy. It's quite choppy. So I'm not really so inclined to buy it. And also at the current prices as well, we're kind of resting around that all-time high resistance, this big old level here. So I'm not really too keen to pick up gold at these prices. Silver, on the other hand, is a little bit further down. It's got some room to work with. I'm kind of expecting similar moves for both of them. So I'd rather put my money into silver, which has got a bit more room to work with, than gold, even though I do see gold eventually breaking through that resistance and coming back to the 2150 level there as well. So for me to be interested in gold again, I want to see some strong bullish momentum like we saw last week, breaking through the highs there, start forming a nice healthy trend again, and then I consider looking to long gold. But like I said, most of my attention will be on silver anyway. But in terms of the Christmas question, yeah, I'm kind of starting to tailor off my trading now at the end of this week. Of course, next week we've got that kind of period between Christmas and New Year's. So I'll be taking that time off to kind of reflect, go over my trading performance for the year, looking to adjust, tweak, and set the plan for next year. Again, we could probably see some nice moves in next week, because I remember last year we actually did see some nice moves on the yen pairs at that time. So there is still room for some opportunities next week, but I'm more than happy to take that week off to kind of reflect, adjust what I need to make myself more efficient trader, risking less for more profit, or take less trades and achieve the same profit, something like that. So I'll be focusing my risk management going into next year. But yeah, that's the plan.
That's great. And I think, you know, that's something for a lot of the audience to hear is, you know, if the idea of not being able to trade disappoints you or it bores you, or, you know, it is something to consider. At the end of the day, step away from the charts if you have that impulse, because, you know, trading when you're bored is really dangerous, especially when there's like very little volume. You know, you mentioned gold being choppy. I know, you know, probably half of our audience watches, you know, trades gold. And, you know, here's an hourly chart. And it's like, do you really want to be trying to force stuff in that kind of price action? It's just really, really choppy stuff. And, you know, same thing with the 4-hour chart. I've had a hard time really finding any meaningful moves outside of this one big Fed day. You know, and then I pointed out my shortcomings with gold recently is I've been very bullish on it, but still I've been right, but my entries have been really poor and I've missed out a couple different opportunities. So I was super bullish on gold following this day, figuring that we would get some pullback. I'm sorry, some follow through, but I wanted to see the pullback first. We didn't get 2,000 and price has left so far, but I do think that it is, like, as you pointed out, it's very choppy. It's possible that we see a little bit of consolidation, and perhaps this kind of kicks back up in the new year. Maybe you start to see some volatility, and in that case, maybe there's an opportunity to find gold longs and still capture it. But I definitely am on the same page. I'd like to see this thing have a little bit more follow through, clean price action before I get involved. Another pair, you mentioned the yen last year during this time. Very interesting chart right now, because from a fundamentals perspective, you know, the idea basically is you've got the Western world looking to cut rates to kind of now that inflation seems to be coming down in a meaningful way. We see a lot of central banks talking about cutting rates, etc. Bank of Japan not necessarily looking to, well, definitely not looking to cut rates, but has even toyed with the idea, some members, about raising rates. And that has obviously caused some real strengthening in the Japanese yen, which is why, you know, we see the dollar yen trading lower here. I think this is one of the more technically good looking charts out there. And it just goes to show that despite holiday season, if there's a true change in the story, the market will still trade off of, you know, that idea of what could be coming for next year. So I think if I'm watching the yen off the daily chart, I'm not in any rush to enter trades. But if this market takes out the lows, I think the yen pairs could actually see not just dollar yen, but yen pairs across the board could see some serious volatility off of that. If the major one, the dollar yen, takes out the previous lows, that could be kind of a leg lower that causes pretty much all the yen crosses to move. Marco, you mentioned possibly adding a pair. Would you ever look at dollar yen?
Dollar yen, no, I would kind of try to find something completely new. So something that's not connected to any of my 6 currencies. That's why I said gold, right? Or maybe an indice or something. So I kind of want to diversify, because most of the time, if I get a move on, let's say, the dollar, these 3 are going to move. Or if I get a move on the yen, these 3 will move. So I want to add something that will move that's not connected. Well, gold is connected to the dollar, but again, it's kind of not connected to all the 6 of the forex pairs. So it's really interesting to me. Or maybe the S&P or something like that. Never really researched that too much. So I'm focusing on new entries on the current currency pairs. But what I wanted to ask, so the US election is going to be this year, right? The next year. So how do you approach the US election? Because during that time, there's like a quiet period, and then there can be a lot of movement, correct?
Yeah, and you know, you talked about potentially adding an indice to the mix. I traded the S&P 500 this year quite a bit some very correctly, some incorrectly. Obviously, in recent times, I've had a really good trade, but I was very early to that idea. Part of the reason I was so bullish, Marco, was because of the funny games that get played in politics. I mean, I think that it is a fair thing to think that, well, starting November 1st, on the dot, we saw a massive stock market rally at the end of a presidential's term ahead of re-election campaign starting. That's also during seasonally the best time of year for markets, and this is something that, you know, I think you can't discount. Seasonality is not a it's a real thing. It's a real powerful force in markets. It's not, you know, fairy pixie dust or anything like that. Seasonality is straight up an observable pattern that occurs in markets. You know, if you're a technical trader, seasonality is a very easy jump between the two, between fundamentals and technicals, because seasonality just makes straight up sense. It's a pattern recognition, just like trading technicals would give you. It's the idea that, look, you know, the S&P 500 on the last 10 years, right, historically moves higher in November and historically moves higher in December. So that was why that was one of the main core components to why I look to get long. What's not shown here, and what's an even more powerful force, is you want to talk seasonality. You've also got fourth year of a presidential term is historically a really strong time for stocks. Go figure. If any of us three were the president of the US and we're trying to go get reelected, we want that stock market up, because nobody wants to look at their 401k and say, this president sucks because he's not making us any money in the 401k, right? So it's a really simple, doesn't matter Republican, Democrat, you know, liberal, conservative, doesn't matter. The point is, you're a human being. You want to win a reelection, you got to make that stock market look good. So that was the basis. That was the fundamental idea behind my S&P trade, and why I think it was the monster trade that it was. Of course, I was early, and had I listened to seasonality, I probably would have been much better off in August, September, and December. I'm sorry, in October, where I had really terrible trading months. Anyways, that you mentioned indices, so I do think that it's worth considering seasonality. They're very strong factors when it comes to indices, especially, but it also reflects in gold and currencies, etc. It's seasonality is a really cool, very simple indicator that, you know, I think is worth looking into. But yes, politics play a huge game in indices. And while I don't care too much for politics, I do try and keep an eye on what does move the markets, because that's obviously what all three of us care about. So I don't know. I guess, Miko, when it comes to indices, I do want to ask, I was going to ask both of you guys about this, but we'll go to Miko first. S&P, NASDAQ, Dow, I'm out of my trade, so you won't hurt my feelings if you say this thing looks overbought. But what do you think? Do you think it's due to pull back? Do you think it keeps going higher? Do you have any thoughts on the indices?
Yeah, I mean, with US 100, US 30, these guys have created new all-time highs. So typically when I'm trading, like the FX markets, when price creates new all-time highs and new all-time lows, that's normally the time I step away, because you know, we've never hit these prices before. I don't know how price is going to react. Are we going to keep going? Are we going to suddenly reverse quickly? So normally when we do that in FX pairs, I step away. And with indices, of course, it's a bit more of a trending market. FX is normally up and down for years and years. But for S&P 500, that one hasn't created new all-time highs yet. So I still do see more room to the upside, because they tend to follow one another. If one's going to make an all-time high, typically the other follow suit if they haven't done so already. So I do see more upside for S&P back to the highs. So if I had to trade one of them, it would be the S&P 500, because we haven't created the all-time highs yet. There's still room to the upside to do that. 48.20, US 30, we've already done it. US 100, we've already done it. So I would quickly just stay away from those pairs. But if I can find some buy opportunities here, that would definitely interest me. We've had a pretty sharp correction there, so I'll probably see how that kind of settles. But if you can place some type of higher low somewhere, that would be an interesting setup. But yeah, it is quite overbought, so I wouldn't be surprised if you do have a bigger pullback, but I do see more upside still.
Okay, fair enough. Yeah, and I guess, Marco, if you were to look at any of the indices, NAS 100, you know, 30, the Dow, S&P. Would you start with S&P? Would you look at Dow, NASDAQ? Each one of them has their unique flavors. It's like walking into an ice cream shop for me.
So let me take a look at the S&P then. Yeah, so on the 1 hour, I'm seeing this major bearish leg right here. So I would not be surprised if a correction follows, but not a big one. I mean, let's go up. So this is looking like a very, very strong uptrend to me. And if it creates new highs, then I would just expect it to crush through and continue. Because I think with stocks, I read Jesse Livermore's book, and he said when there's an all-time high in stocks, usually most people start selling because they panic, but then it explodes up. So I would not be surprised if this kind of continues heavily pushing up.
It's a very different market in some ways than FX because
for sure, yeah.
Because to your point, a breakout, and that book is dead on, because when you get a breakout through the all-time highs, everybody gets a news notification like, hey, stocks are strong right now, and suddenly it creates the herd mentality. And the other thing, I pointed this out a lot, and it's one of my theses why I think the S&P 500 can keep going. I am looking for now a pullback, but I think it could keep going because there's a lot of people who have been parked on the sidelines during these last few years. Markets have been really scary. Things have been pretty, we had Russia, we had invading Ukraine, we had COVID-19, you had, oil prices skyrocketing, and Israel and Hamas. I mean, there's just so many things that are keeping people scared of touching the markets. And suddenly, the Fed cutting rates looks really optimistic, and you have a lot of people who were very heavy in cash, and so money markets hit like all-time highs, which is of course just a way to say put money in the bank and save it there. So it's really interesting. It could continue to go. I just think I would generally look for a pullback in this case. If we do get one, I'll look to re-enter, and if I miss the all-time high breakout, I think it's all right, because I've caught a little bit of the pre all-time high. So, but yeah, definitely, Marco, we'll have to get an update from you next time we see you on where you're at with your research, what you're doing, whether you add an index, whether you add gold, whatever you do. You'll definitely have to let us know.
Sure. Then I'll be in the S&P with you from the
yeah,
bottom.
We can both trade it. Yeah. So my next move is to go all in short on it. I'm just kidding. No, but Miko, Mark, I want to thank both of you guys for coming on the show. And I do want to say, for those of you guys who are in the audience with us live, we just dropped something in the chat. You can find Miko and Marco on YouTube. It's Miko Audu and Marco's Trading Journey. You can find them on YouTube. Make sure to go subscribe, go show them some support. We do try and do that with all of our guests. They do help to make the show what it is, and we appreciate you guys coming on. So thank you very much for being here, and have a happy holidays, and we'll see you next time.
Thank you. Happy holidays. Goodbye.
See you guys. Yep. Always good to have those two on, guys. And again, please go show them some love. Go show them, they keep coming back because it's helping them to grow as personalities in the space. And that's how it should be, right? We're trying to introduce them to people and introduce value to you guys as an audience. If you guys enjoy the content, make sure to hit that thumbs up button. I'm going to keep going for a few minutes here. I do want to say the index trade is an interesting one to watch. And I want to pull up a market that we don't talk about too frequently. It's the Russell. The Russell is small cap stocks, and it doesn't get the same love that the NASDAQ, the Dow, and the S&P get in terms of recognition, but it's small cap stocks in the US. And small cap stocks are in some ways a true indicator of the economy, or how generally businesses are doing in the US. What can be deceiving about the S&P 500 is it's only 500 stocks, but it's not equally weighted. Back up, what does that mean? Well, it's a basket of 500 stocks, but some of those stocks get a way heavier weighting. There's more of it in the basket. So those small selective stocks typically carry the whole basket. So which stocks am I talking about? Apple, Amazon, Google, Nvidia, Meta, those things have flown. And so the S&P looks really, really good. But then you look at the Russell, which doesn't have those names in it, and look what it's done. This is a weekly chart, guys. However, we're on the cusp of a potential good signal. And I am actually very bullish on the Russell going into the next year. Now, I'd like to see this breakout. Again, we are hitting resistance that has been keeping us down since 2022. But if we can get the breakout, I think things could be very intriguing into the new year for the small cap side of things. Why the small caps, though? What's your interest in the small caps, Nick? Well, here is the reason why the small caps, and this does have impact if you trade indices, etc. This is still meaningful to you. You could still trade, indices in your own way. But here's the thing: the Russell 2000. It is a lot of financial stocks, and it's very susceptible to interest rates. But interest rates are coming down. In fact, they've come down really meaningfully. Take a look at the 10-year. Has dropped like a rock since it was up at near 5%. It's now 3.84. This is great for the Russell, right? Russell, probably loves to see this. As long as we don't get too much economic slowdown, Russell could have a real pop next year. It already has so far recently, but it hasn't been able to break out of that level that we talked about. So I'd like to see if we can catch that. Nick, would you say there's more opportunities in stocks over FX? I would say opportunity is based on the trader and what they backtest and what they like to trade. I personally trade a lot of things. I trade indices, gold, and I trade FX as well. But I do alternate my focus depending on what fundamentally is going on. Recently, I've been really focused on indices because the fall in rates has just caused a beautiful bullish run. And, I like that story. The story is clearest to me there. The other story that is clearest to me, if I'm going to talk FX, is the dollar yen. Dollar yen looks really good to the downside. And I missed this move, but I know Frank caught it inside of our VIP signals group. Let me double check that that is the case. Well, I know that he caught the trade, but I'm curious if he's still in the trade. Yeah, he sold it December 12th up here. Yep, he sold dollar yen up here. So that's Frank's trade right there. He shorted it, sold it. And that was a beautiful trade too. I told him when he took the trade, I was like, "Oh, that's a great trade." He sold it December 7th. He sold it December 12th. So his December 7th one didn't work out too well, but he did re-enter, and that second trade was much better. Yeah. Nick, is there any book you'd recommend to learn in depth about indices? I'm an FX trader. I'm looking to diversify also. Hey, if you want to learn about indices, there's some videos on my channel that are totally free. Pros don't trade stocks. They trade currencies, futures, commodities, indices. Pros trade a wide basket. Plenty of pros trade stocks. If you're looking for a book for indices, I don't know. I don't really learn from books, to be honest. I learn from, back testing and spending time on the charts. But if you're asking, fundamentally how to learn about stocks, how to learn about indices, I would say watch this channel, which is totally free. I have some videos on the topic. There's great topics or other creators that have put out topics on indices that you could check out. But yeah, definitely worth checking that out. Do you think NASDAQ can continue bullish? I mean, I do think it could. FX trends better than stocks. Just depends. Depends the timing. Again, that is way too blanket of a statement, because right now indices are trading way more trendy, right? By far and away. And if you look at the long term, I mean, look, You get some beautiful trends in the indices. But so I mean, if you look at, like, for example, if you were to look at dollar yen, that's a very trendy pair right now, but that can change, right? Things change over time. That's why fundamentals matter. Something that's trending really strong right now might not trend really well tomorrow. But here's, like, for example, here's dollar Swiss. Dollar Swiss is not a very trendy pair, right? It just goes back and forth. And, if you look at it over the very long term, it's just gone sideways for like 10 years. So it just depends which chart you're looking at. What are your thoughts on the potential to not cut rates soon being stirred up in the news? I think that okay, so if you're asking, what are the thoughts on potentially not cutting rates? That to me would be going against kind of the consensus of what fundamentally looks to be the case. Like right now, it seems like rates are coming down. Yields, look at the yields, right? They're dropping like a rock. That is the expectation for the Fed to cut rates, and it's been very spot on accurate for the last several years. In fact, this has led the Fed's decisions many, many times. So my point is, yields are coming down hard. Rates are probably, the Fed funds rate is probably coming down. If there wasn't a Fed funds rate cut and potentially a hold or even a hike, what would that entail? Well, it would entail like rock solid economic numbers and jobs numbers that were just screaming hotter, and inflation to tick higher, and core PCE on Friday to be hotter than expected. We're not seeing any of that, right? So the idea that rate holds or hikes are in the cards, I don't see it right now. Right now, the consensus is labor's staying in there, but it's cooling. Economic readings across the board have been cooling. And yields are falling. Those indicators are telling us that rates are likely to be coming down. So what happened if the market crash? If you're a new trader, there was a thing that was going around on Twitter yesterday. It was #market crash. I can tell you this. I've been doing this for 8 years. There's always people talking about market crashes. It is one of the most incredibly difficult things to try and call when a market crash is going to occur. Don't waste your time on that. In my opinion, trade what's in front of us, not, trying to time a market crash. I think that is one of the most, I think that's one of the common new trader traps is, oh, this market's too hot. I gotta short it or sell it or, get completely out of stocks because it's going to all come crashing down. And then you miss out on the next rally. Do you know what people were saying? On or near the days that I bought into the S&P 500 with that trade? People were saying it's going back down to the previous October lows. Constantly, everywhere. People are saying rates are not going down. They're saying this is a hawkish hold and there's no chance that rates come down anytime soon. Guess what the market did? It had its best rally in like a decade, right? So be careful listening to just the headline news. You got to look at the numbers. You got to look at what's in front of us. Rates being held and inflation cooling. People were saying we're not going to be able to get under the 4% rate. That was a reasonable concern, but the trend was inflation was cooling. And so we were incredibly right about that. And I want to reiterate, I'm not always right. I was early too. So that was wrong. I was wrong on the long side over here, but I was incredibly right about the inflation cool down side playing out nicely. And the reason I'm patting myself on the back here is because, again, you have to be really careful, always thinking, oh, the market's going to crash and never holding on to runners. You can get into that trap and miss out on all the gains. So, yeah. Quick look at the euro. Here's the euro back trading at the 1.10 level that we've been watching. Support did end up holding really well. I think if you're looking for euro bullish setups, in my view, see if we get a breakout. And that might be in the new year, so we might have to wait on that. But euro dollar to the upside looks interesting to me in the new year. Nick, if the Fed's rate cut projection happens, will it still impact the market given that it has already been announced? That's a great question. There is still consensus in the market, or not consensus, but there's still speculation in the market that rate cuts will not come until May or June or July. So if you do in fact get rate cuts starting to really solidly be expected in like March, yeah, there's more upside, right? You also could point to the idea, here's the VIX. The VIX is still trading at 13.5. So there is some sentiment in the markets that, you know, if this thing was at if it was at 11 or 12, right, getting back down to these levels, the point is the VIX has some room to still come down, believe it or not, in my opinion. We still could see a VIX at, 12. We see it at 13.5. This is the fear index, basically. If you see it off the lows, there's still fear in the markets. So that would tell us that there is potentially more room to the upside, but kind of limited compared to when the VIX was much higher and there was more fear in the markets. Again, remember, we bought in, I went long S&P during essentially the end of October, so right around here. So there was plenty of room for that VIX to come down when it was trading at like 18. So that's why, I've taken a profit on my S&P trade. I trailed a stop got hit. So I'm waiting for another opportunity, but I wouldn't mind if the VIX popped a little bit, if we got a little fear. I like a healthy buyers and sellers market. I don't like this, perpetual, ecstatic over enthusiasm that we're seeing right now. That makes me a little bit nervous as a bull, right? I don't like when everybody is euphoric. I was long over here and the markets were so pessimistic, it wasn't even funny. Now over here, the market is so optimistic that we're almost entering into total like euphoria. This thing can't go down. And so that makes me a bit nervous. Doesn't mean it can't squeeze higher in the short term. I might have gotten out just before we see a push beyond the highs. Which is fine. I caught a lot of this move and I'm going to try and stay patient because we also could see a pretty good sized haircut pullback, in the new year or soon. We'll have to see. I'm not necessarily saying, oh, the S&P comes down. I think if you're trying to short this thing, you're fighting the flow of traffic hard. So I think I do want to be long again, but I'll try and reset, take a profit, and look for an opportunity to do so where the risk is a little bit more worth it for the reward. That's my opinion. I've traded for FX for 10 years, now having much more success having switched to indices. Buy-side bias on them is a no-brainer. Vince, that is definitely true, I will say. You don't want to talk to 2022, Nick, because I was really bullish 2022 and bullish 2023. 2022 was the exact opposite. Sellers would have been like, all you got to do is be sell side and you're going to make money. And they were right during that year. 2022 was awful. It was terrible. So I would just say, just be cautious on the recency bias. I feel the same way sometimes. I'm not just, trying to criticize you. Recently, I've felt like, man, this stuff cuts like butter, but sometimes you have to check yourself. Remember, indices do not just go up all the time. There's some painful drawdowns if you're in that camp. So I think being open to the idea of staying out of the market, I don't like to short it, but I do like to be long at the right times and avoid trading it when it's moving poorly, right? I think, here's why I don't like shorting the S&P. You know why? Here it is. You want to short this? I mean, if you're right, sure, you can make great money shorting. And I just think it's a really hard trade. Shorting the S&P is incredibly hard. You're shorting innovation, creativity, and humankind. That's not something I want to take a short bet on. Now, again, I'm not saying you can't short it and make money. I'm just saying it's a hard bet to place. Timing that is incredibly difficult. So we'll see. So like I said, for me, it's how do I play this? Well, if I think it's overbought, I don't short it. I just wait for a proper pullback. Okay. So that's how I'm approaching it. I know I've talked a lot about indices today. I apologize. I do also genuinely want to talk about gold here. I pointed this out. Let's take a closer look at the seasonality, because I made the point here a moment ago with Miko and Marco on the show, just how if you're a purely technical trader who is learning fundamentals, Do me a favor, type yes in the chat. If you're new to fundamentals but not necessarily trading, do me a quick favor, type yes in the chat. I'd be curious to see if you short it, you'll be short on money. Most likely. There are some traders, there are some short sellers out there. If I was to short sell, if I had to sell something short, what would I do in the stock world? It'd probably be an individual stock, which is incredibly risky too, but I would not short the indices. I think that's really hard. Anyways, okay, thank you for the yeses. So for those of you guys who said yes, you're newer to fundamentals, but not necessarily newer to trading. I want to show you guys seasonality. I mentioned this a moment ago. Part of the reason we were bullish S&P 500 and NASDAQ in December, and this applies to FX, to gold, to commodities, oil, whatever you're trading, seasonality is a factor. Check this out. Seasonality shows us on the last 10 years, this indicator on our EDGEFINDER shows us the seasonal trends year over year, month over month. In the last 10 years, historically, we see a rise in the stock market. The white line, guys, represents this current year's performance relative to the average historical performance. And look, this year has been really pretty dang spot on. You'll notice that most months out of the year, seasonality has followed suit. So if you're a trader and you're like, okay, seasonality, how do I use it? If you're looking at gold, for example, let me show you gold. If you're a gold trader, check this out. We're going obviously into January. And in January, we see an average historical gain in the last 10 years during the first month of the year of 2.68% in the last 10 years. Really, really interesting stuff. We can spot that and say, well, based on history, if history is going to repeat itself, there's a probability here that we could see a nice bullish push in January. Especially if you get some labor statistics starting to cool. Let's say NFP comes out cool in January, showing that December was a slowdown in the labor market. Hey, gold could have a little pop. Okay. So if you guys want to use this data and others, the Smart Money Tracker, you can watch our COT data, the market scanners for all of the different metrics. I just want to say, we announced this earlier, but if you guys are with us here live watching right now, you can currently get 40% off of our software. If you want to use the tools that we use every day on show, get 40% off by clicking the link in the chat right now, shooting a message to our team, and we'll get you hooked up with a huge discount off of the product. This is our holiday sale that we're doing. I just want to say, if you are somebody who is planning on taking your trading to the next level in the new year, take advantage, get yourself a copy of the software, or join the Discord if you're not already in there. Make sure to come do that. I'm telling you, if you have some downtime, take advantage. If you have some downtime in the coming days and you want to be a successful trader in 2024, if you're struggling to get there, I'm telling you what, before I was profitable, every Christmas, every New Year's, every day I had off, every weekend, I was studying, back testing, and working hard at this stuff. The reason I point that out is not to kind of gatekeep or anything like that. It's to tell you what it really takes. If you want to be a profitable trader, ask yourself right now, do you actually want to be a profitable trader? Like, do you really want to become a profitable trader? And if the answer is yes, then I would say to you, the sacrifice is you got to spend a lot of time working on it. It's like if you wanted to be a great chess player, if you wanted to be a great mechanic, if you wanted to be a doctor, a lawyer, whatever you want to do, if you're taking it seriously, trading is no different. It takes so much effort. And if you want to get to that level in 2024, I encourage you to spend some time. Whether you decide to get access to one of our tools or resources to help traders or not, even if you're like, okay, well, I'll just spend some time back testing, then hey, good for you, do that. But do yourself a favor, and spend some time. If you want to take it to the next level in 2024, take some time if you have some time off. We have half days here in the office. And, to me, that's like the second half of the day. I'm great because now I can go do some things, some productive things that I wanted to do. So use that resource. If you have time away from work, if you have downtime, like I said earlier in the stream, my dad moment is turn off the video games, turn off the Netflix, and turn on the charts. I'm telling you, if you want to take this stuff seriously, spend a couple hours a day during any downtime that you have. So, yep. All right, guys, that's going to wrap it up here for the show. Thank you for hanging out with me. I do want to say a thank you to you guys, and we will be streaming tomorrow. So we got one more day, and then we will be off for the holidays and back shortly after. Hi, Nick. Enjoyed watching your commentary this year. Learned a lot. Curious to know what started first, your A1 company or your YouTube channel? My YouTube channel. So I started trading like at the end of high school. A couple years later, about 3 years into learning, I started making YouTube videos. And people resonated. I met a lot of great traders. I created a Telegram group, and I met some traders that some of which are still in our VIP group to this day. I still have some friends in there from the early days. Eventually, my background in software engineering led me to building tools for my own trading, and people saw them in my videos and they asked, "Hey, Nick, can I get that too?" And I was like, well, I spent like 60,000 hours designing this software, so you can have it, but I have to charge something for it because this is like my blood, sweat, and tears. And so I started selling software as well. Fast forward to today, we have a team of people that build software. We have a team of people that help to create the content, and that is what we do. We are a software company. We also create content for traders, and I trade my own money. So that's kind of in the college bedroom. Very, very humble beginnings, like really humble beginnings. If you go watch the early streams and videos, you might cringe a lot because I certainly do. And there was one point even where I moved back in with my parents and I was still making videos. But obviously, when you start out trading, you don't have a ton of trading capital. So you don't just start, killing it, right? Even the greatest traders are not able to generate, massive returns every month. That's kind of an illusion. But regardless, I moved back in with my parents, and there's this running joke that my sister, Julie, who does our marketing here, she loves to tease me because during that time, I didn't have a background for my videos, but I wanted to be on camera. I like speaking. I like being on camera. And I put up a bed sheet behind me just to have a stable background because I was like sitting in a rundown or a messy bedroom. I was like, I can't really. So I literally hung up from the ceiling a bed sheet just to have behind me a solid background. So it's come a long way from those days, but hey, we're here, and thank you guys for all the support along the way. That's going to wrap up the show here today. Make sure to hit that thumbs up button on your way out. And with that said, guys, have a great rest of your trading day. We'll see you back tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through our daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And yes, I'm Santa and I work for A1 Trading. Don't ask any questions. Now, get lost because I have some presents to deliver. I'll see you all at Christmas.